Our next guest says AI has been the defining topic of this year as the technology sees massive leaps in performance driven by new model architectures for the technology. Gustav Fridell, associate at GP Bullhound, joins us now. Gustav, thanks for joining us on Squawk Box this morning. The AI ecosystem is so big and so new and so abstract at this stage to so many market participants. What is your guidance for investors watching this program about where the best opportunities lie within the AI ecosystem from an investment perspective?
So when we look at AI, we do it a bit differently than many others because people like to bucket AI like one big sector with similar companies within it. But how we instead try to look at it is to break it up by the value chain, all the way back from the hardware to the data to the model and then to the end user applications. And what we believe is it's the opportunities within these earlier stages of the value chain, the picks and shovel place, so to say, that actually enable this shift that are the most interesting companies. So that is where we are looking currently.
How do companies navigate adopting AI in a world where there is so much regulatory uncertainty? And just yesterday, we were reminded once again that regulators in major jurisdictions still haven't figured out how they want to go about regulating this technology.
So regulations will definitely play a big piece when we have such a transformative shift that we're seeing with AI. But for investors as us, the most important thing for us is to identify which are the companies that we believe will be able to benefit and have a successful future, even if there are regulations ahead of them.
Gustav, in terms of how much AI some of these companies need to have at this stage to be able to be successful in the fundraising rounds, what would you say it looks like? I mean, is it instrumental in terms of how they go out and market now to investors?
I would say that AI companies somehow seems to defy the broader economic conditions that we see. For example, in Europe, more than a fourth of all VC deals are towards AI companies. And the number of AI companies have actually doubled since 2019. So it is definitely a benefit because many investors are interested in this trend, but I wouldn't say that it's a critical criteria.
How much competition do you have too from some of the big name stocks out there? I mean, I was looking at one earlier this week, and for me, it was such an instrumental investment. The $50 million that NVIDIA put into a small stock, Recursion, effectively very small change when we talk about $50 million versus at a $1 trillion company. But it was very key in changing the direction for Recursion stock, one that is in the AI space, coming up with new therapies using this new technology. How do we think about the competition now coming from some of the major players like NVIDIA and Microsoft and beyond that want to deepen their AI exposure that might be going after stocks that would have just been for VC world previously?
So from an investor point of view, both NVIDIA and Microsoft and these players with cloud infrastructure and training infrastructure that can help these companies, they have a very good position to get on the cap table of these companies and because they can bring that hardware to the table. But for us, what we are looking at instead is a bit other different pieces of the value chain. For example, companies looking at or having the data that is used to train these models or the software that are used to optimize these models and the infrastructure around it. So there are definitely plays that aren't as at risk from NVIDIA and the likes.
I also ask you as to how we think about the multiples for some of these new AI companies. Is there any norm now, industry norm, how we think about the multiples they should be sort of valued at this stage, given there's also been a valuation reset that's gone on in private markets?
I would say it is still developing very rapidly. Some companies that we are looking at trade at traditional software multiples, whereas others trade at significantly higher multiples. It all depends on the case and context, but in general, it's a bit higher than the other companies that we're looking at.
I'm also curious about the type of companies you're coming across at this stage, because we're still learning about what some of these unicorns, decacorns are doing. But what jumps out to you about some of the types of companies that you're talking to at this stage?
So what is really interesting is the companies that over, say, decades almost have sat and done mundane and administrative processes that is used in a broader context. And these companies now start to realize that this process and all the data that they have from it, they can use that to train AI models and automate that process in the end. It is this immense productivity boost that we can see from automating such processes that are truly interesting in this shift. And it's the companies that sit on that data, for example, that are the ones that are really interesting to us.
We know that VC firms are becoming more selective about their investments in this higher interest rate environment. How vulnerable is the European tech ecosystem to this new environment?
So the European ecosystem isn't immune, as no one is. But what we're seeing in Europe overall is that since we have had so many successful companies started here in the last few years, Spotify, Klarna, Revolut, and others, the startups that sprung out from these companies with the former employees, for example, and the cities where these companies were founded, they usually have a quite high success rate because they have the experience and knowledge on how to run these startups. So what we believe is that as long as, from an investor point of view, you are at the right place at the right time, you have a local footprint in all of these local ecosystems that we have in Europe, we will still be able to find interesting and successful companies.
Gustav, thank you so much for joining us today. Come and see us in studio at some point. Gustav Fridell, Associate GP Bullhound. Coming up on this show, pause debt